What's going on, guys? Philip at Trade Genius. Time to do a Bitcoin update. It's Tuesday. We're going to talk about gaps in this video, and I'm going to show you how I look at them and also some other levels within the gap to look for. So we're going to talk about that. We're also going to talk about the VWAP levels. I think when you see what I'm going to show you on the VWAP levels, you'll be surprised, and you'll want to keep these levels on your charts for reference. Also, we'll look at the death cross here on a 4-hour chart and talk about that. And then, of course, we'll look at the daily. We got a moneymaker firing, so we're going to talk about the levels there. And we'll look at the internals here. I think it's important to note what's going on with the internals today. We'll take a look at our Bitcoin Delta heat map. And last but not least, we will follow up on the NVT indicator that I said would be firing a signal last week. So we'll look at where that's at and what that means going forward. All right, guys, and real briefly, before we dive into this video, we are running a special till Thursday. Now, on this special, guys, I'm going to give those of you who sign up for either the moneymaker software, or which you can get with the 40% off using the code, or bundle number 2 below, I'll give you the daily altcoin signal, which has been extremely powerful with altcoins used on the daily time frame. You get some really nice percentage gains. Normally that's only for the in-class attendees, so we just did one in Hawaii. We're going to do one in Orlando. Normally I reserve that for them. They also get a 4-hour indicator for altcoins, but if you get in this week by Thursday, I'm going to throw that one in. All right, guys, let's dive into this video.
Trade Genius.
All right, so we have a gap, and just so you guys understand, gaps are created, and this is on the futures chart. So this isn't the actual Bitcoin USD, BTC USD chart. This is the BTC1 exclamation mark. That's the symbol in TradingView. It's the Bitcoin CME futures. This is the big contract, the one that's getting more and more volume, different from backed. Is different from the CBOE contract that they no longer trade. Okay, this is the one that the big institutional guys settled on to use as hedging or just speculative trading on the Bitcoin futures market. So we had a gap. Basically, the way I measure the gaps is from the high to the low, and so the midpoint of this gap is 92.20. The entire gap is from 89.18 to 95.89. So $700 gap. And so basically what I look for on that is obviously a retrace to the gap. The first thing I look for, now this is on a 4-hour chart, and I look at them on a 4-hour chart because I want to draw this midpoint, and that's what these black lines are. They're midpoints, and a lot of times price will react to the midpoints. It's just one of those things. I don't know if it's because the algos look at that as well or what, but the 50% mark between the gap is almost like a pivot point that you can reference on the chart. So that's one tip. But another thing I like to do is I like to go to the daily chart. And when you go to the daily chart, what you can see is whether or not the gap even shows up. Sometimes you'll have a 4-hour gap and it doesn't really show up on the daily chart. I don't put a lot of stock into those gaps, okay? The ones that really are a factor are the ones that show up on the daily chart. So this is a clear daily gap, and I would expect this gap to fill. And I actually hope that it does fill, because I think we got a lot of upside potential here, and I'd rather get this out of the way, and then we can really concentrate on heading higher, because we will have a nice run up. Otherwise, if we do run up from here, I'm expecting a fairly large retrace that would close this. Okay, so just keep that in mind. Now, when we look at daily gaps, one thing you're going to want to note is when the gap happens, how long does it take to fill? So, for example, this gap, it took us, so once, I don't count the gap day itself, but after this gap is officially formed, 1 day, 2 day, 3 day, the 4th day back here in May, we filled that gap. That was a real quick fill, spike down. People weren't really expecting this to spike down that day, and it was a really quick fill. And that's how, when they fill pretty clean like this, that's what you want to see, a real quick spike down and then a fill. Okay, so that was 1, 2, 3, 4 days, and it filled. The next time we saw a daily gap was here, and that took 1, 2, 3 days after the gap was formed to fill. Again here, now this particular one back in June, it didn't fill for 3 months. So there is that scenario too, and that you have to also keep in mind that can happen. But when they do happen, like I said, if it runs away like it did and ran up to $13,000, almost $14,000, then you have to keep in mind this gap still isn't filled, and longer term, what's that going to mean for price action? And now keep in mind too, gaps don't necessarily have to fill. There's no law that says they have to fill. This is a more of a human nature thing where they know the gaps are there, and if the price action starts getting bearish, that gap target area is going to be on the radar for the bears. And you get close enough and boom, it sucks them in. So it's just a trader mentality thing. The algos probably have it in their systems too, but there's no law that says they have to fill. Okay, so that's just a trader sentiment thing. On this chart here, this was a very small gap on the daily, and that wick filled there. So this gap here on the daily took 1, 2, 3, 4, 5 days to fill. Okay, this was a very small gap, but 1, 2, 3, 4, 5, 6 days, and that filled. So you can see a lot of times they'll fill between 4 to 6 days, okay? So if we, that's what we might be able to see here on this. Again, this gap level is going to be up here at around 88.90 or so. Just watch that over the next couple of days. I think that's a strong possibility of happening. All right, next chart up is the VWAP. Now, what I have here is the yearly VWAP, which is this big green dotted line. And then this thinner line here, this green thinner line, is the developing yearly VWAP. So if you remember from past videos, VWAP stands for volume weighted average price. So that means where is all the trading happening? What's the average price that most of the volume's happening at? And that's at a key level. A lot of times price respects that level. So if you look at these levels, it's interesting because we came down, we basically tagged the yearly VWAP. Okay, so that was calculated at the close of last year. That's the current yearly VWAP. The developing VWAP is taking in all of the current trading activity that's going on. And so that developing VWAP is at 86.42. And you'll notice that once we broke below that, that kind of acted like a lid on price. Then we came down to the yearly VWAP, and then we zoomed back out of it. This other orange one, which is a little thinner, is the quarterly VWAP. Okay, so that's the every 3 months, boom, what was the average weighted price for that quarter? And currently this last quarter closed at 10,000, about 10,500. So anyway, price runs up, tags that level, and retreats hard. So you notice we went from the yearly VWAP to the quarterly VWAP. So it's important to have these levels on your chart, okay? And this is an indicator I use. It's called the VWAP STDev Bands version 3. So look, if you want to put that on your chart, look that up and put those on there. Put them like on a separate chart, and you'll be able to reference those. And you just simply note which time period you want, whether it's 12 months, 3 months, or 1 month. Thinner blue line is 1 month, and those are also good to know where they're at. You notice we can't get a close above that level either. Okay, so good to know where these are and where the developing VWAPs are as well, because those will act like moving average bounces. So currently we're having a bit of a convergence down here at this 85 level. So another area that of a potential bounce around that gap close level. Okay, so when you get things converging like that, that's a good sign that you're going to get a bounce if price does come down to those levels. All right, guys, another chart, the 4-hour chart. This one, we were referencing this quite a bit as we were gyrating inside this weekly block, which we head faked out of, tagged one more lower block level that tagged out those lower lows way back there, and then boom, we zoomed higher. And now we're pulling back, and we were in a bit of a bullpen, but we've kind of fallen out of that right as we're recording this and pulling back. So, retagging this 200 period moving average is probably going to produce a short-term bounce. But again, the gap close is still going to be calling, and I'm still looking at that as a potential trade target to the downside over the next 48 hours or so. So keeping an eye on that. But we will see some sort of bounce typically on a retest initially of this 200 period moving average right at 89.60 or so. So watch that level for a short-term bounce. All right, guys, daily chart. Now, obviously, we flipped back to a moneymaker buy. We've broken over this trend line with daily closes over it. Have not reclaimed this thin block that comes back from this weekly chart. If I switch to a weekly chart, just ignore things here. But this here, right here, body of that weekly candle, okay, that's acted as a nice support resistance area. Very key for me to see a close above that on the daily, and weekly would even be better. But since we can't or haven't, and we've seen a lot of wicks above here, okay, so there's some resistance here. So I think we're going to see a little bit of ranging here, most likely, before we see any kind of larger move back up. Okay, but moneymaker has fires, or in a moneymaker buy condition, and so largely we'd be looking for dips. But guys, whenever we see a big candle move like this, and if we go on a 3-day chart, for example, you won't find a 3-day bar that big unless we look back at maybe late 2017. But by and large, a 40% move like that on a 3-day chart has happened very few times in Bitcoin's history. When it has, it's been at much lower valuations, like sub $1 and the $5 area. And both of those times when that has happened, 40+% move in that time frame, you're seeing the beginning of a much larger move, which plays into our pre-halving time frame. So just bear that in mind as well. All right, guys, so what I'm looking for too is also on the internals, right? So BitMEX internals. Now, the premium index, whether it's being discounted or it's trading at a premium, right now it's trading at a premium. This acts kind of counterintuitively. So if we've got negative bars, that will help tend to drive price upwards, and vice versa. If we've got positive bars, that'll help drive down price. Now, you have to temper that with the potential or pending funding. So right now, the pending funding is actually going to be jumping up. So that's actually fuel for the downside. And we're starting to see that move actually as we record this right now. So whenever we see these funding indicators, bubbles or circles, if they start jumping up or jumping down or diving down, okay, that's a heads up. If they're just hugging the center line, that's fairly normal. Normally, you're going to see 0.01 most of the time on BitMEX funding, and that's just basically, I treat that as neutral. Okay, but if you see greater than that, either to the downside or the upside, that's a heads up. Now you see potential funding or estimated funding for the next round, which is coming up shortly, was to the upside at 0.05. That's an elevated reading. That means traders are net long. And what do they like to do with the herd? They like to punish the herd. So we're seeing some downside squeeze here. That's kind of to be expected considering that the funding is elevated. And so sure enough, we've taken out this low here and price is retracting. So basically they tapped into that liquidity and are going long. So probably trading like a down channel range, taking out these lows. They'll try to take out the highs next on a downtrend, like a trend line, take out that trend line and then move lower. That's a lot of the times, the majority of the time, that's the games that are being played on Bitcoin at the larger future exchanges. All right, here's the delta heat map, okay? So we're in a buy condition. That means you're going to buy the dip. So normally what happens is when we get into these buy or sell conditions, this works best when there's volatility and there's a good trend. When things are really sideways, there's just going to be a lot of choppy action and there's not a whole lot to fade from. But the rule of thumb is we got nice volatility. You're going to want to buy the first pullback, and so that would be this moving average in pink here, and that is around that 87.50 level. Okay, so if that pulled back and we got a gap fill spike, that would play into that. And but generally speaking, when we've got delta increasing, that's very bullish. That means people are buying the futures up on the futures exchanges compared to the spot price of BTC, and that's how we determine whether we should be bullish or bearish with this. So you buy the pullbacks in this condition unless it flips to the reddish pink condition, and then that's where you have to hold off, reassess, and then if we get a drop, then you want to fade that first pop back up on that. So basically this is a buy the dip or sell the rip type setup. So right now we're in the buy the dip mode. All right, last but not least, the NVT indicator. We talked about this last week. So basically this is like Bitcoin's price to earnings ratio. More transactions on the network make the network more valuable. That's basically the rule of thumb with this. Now, Bitcoin's becoming more popular. So in the past we had these, this level at 145 and the low level of 50, and basically that was like any oscillations above or below that was generally a very simple buy or sell indicator long term. And since Bitcoin's network is getting busier, those levels have actually started to become less of a factor, and now we're seeing more and more usage. So what I'm looking for now, what I think is more accurate, is whenever the NVT ratio crosses the signal line. So you have an NVT ratio of 90 days. Signal line is a 13-period moving average of that. And whenever we see crosses on that, that's very key to take notice, and especially on the upside or in the upswing. So when we're swinging up through that. So if you look at the last couple of times that's happened, and we talked about this on last video, 46% almost here on that last one, and almost 300% on this last one here. And we're trending higher. And now we've got the cross. So last week we were talking about we'd probably see the cross this week, and we have that. So this is basically confirmed. And now at this level, you want to be buying. You want to be a buyer of Bitcoin when these cross. Okay, long term, that just is it's very, very high returns. So that's where we're at. That has confirmed. And so it's, again, another indicator that's letting us know that it's time to buy the dips. So again, guys, goes back to the gap fill, having an eye on that. I think, again, with that extreme price move, and you can blame that on China getting bullish back on blockchain, which I believe they are. I think we will see a more sustained uptrend on Chinese related altcoins and Bitcoin in general. Because of the positive sentiments now coming out of China. We'll talk about that a little bit more in the week. Or you can blame it on the Tether thing again, where this time it looks like they're really insolvent. So people mass exiting out of Tether back into Bitcoin for safety, or even other altcoins. So, there's that aspect of it as well. And technical too, we were oversold. We've had our 40+% pullback. We're 8 months out from the halving cycle. All of those things can converge and create explosive price moves, and also signal a continuation of the trend. So, take your pick, but the fact of the matter is we're in an uptrend, we're heading toward the halving cycle, and a lot of things are telling us to buy the dip. So you have to take all of that into consideration and plan accordingly. All right, guys, well, that's it for this video. Appreciate you guys watching. Please hit like and subscribe. Again, if you sign up for the specials or the indicator, I'll throw in that daily altcoin indicator, which has been doing really well for us. All right, guys, I'll see you on the next video. Take care. Bye-bye.
Trade Genius.